The price action this week has been bullish. Whoa, wait a minute. Is Pete getting bullish? Well, I've been bullish. I've just been moderately bullish. I'm not gotta have them bullish. I'm more in the line of plug your nose and buy them bullish. But make no mistake, the market is going higher currently. And because I can't fully get behind this rally, I'm keeping my trade duration very short term, and I'm focusing on buying stocks that have been strong and that have temporarily dipped with the market. So they're strong on a D1 basis, but maybe on an M15 or an M30 basis, the stock is pulled back, it's found support, the market dips on any given day, and those are the stocks that I've been buying. I'm going to take a look at the recent picks that I've shown you, and then we're going to get into some market analysis, and I'll describe exactly what is so bullish and what the news ahead looks like. Netflix, that's the pick that I showed you last Sunday. I'd mentioned to you that I loved the fact that the stock was able to get through this downward sloping trend line. It was able to find support above the 100-day moving average. I love the fact that the stock has been strong all year long, and so now it's finally starting to find some support, and it was working its way back above AVWAP-E. Awesome pick. I traded this a few times this week. Every market dip, it provided me with a nice entry. So I'm going to look at the 15-minute chart, and you'll see every single dip was gobbled up. You had nice opportunities. Okay, this one didn't completely pan out, but you had gains in here, so you could have stopped out for a nice gain in here. The next day, any one of these dips, you've got great buying opportunities. And let me zoom out because this is Monday's price action right here. Beautiful, beautiful. So plenty of opportunities to get long this stock, and it has been working its way higher. And now Netflix is above the 50-day moving average. I still like it. BE was the pick that I gave you on Wednesday. I told you I love this stock. Same thing. Every pullback, look for an opportunity to buy it when the market finds support. 5-minute chart, you can see on a 15-minute basis, we'll zoom out again, you can see lots of opportunities to get long. So every time this stock dipped, you had a nice little opportunity to get long. That's how I'm playing the market right now. I don't have to have a lot of overnight risk exposure. I do see the backdrop deteriorating, so I'm looking for those strongest stocks, and I want to have some type of pullback. What you absolutely should not be doing right now is chasing breakouts to a new high. That applies to both the market and it applies to stocks. So if you see a strong stock and it gaps way up, don't chase it. You have to have a pullback. You have to know that those buyers are still there. Once the market finds support, once the stock finds support, fine. Then you can go in, you can buy those types of stocks, but do not chase. The market's very tired in here. Stocks at an all-time high are also very tired. So when you get that gap up, most of the gains have been realized. And that's why we want to find a stock that was strong 3-4 days ago. Heavy volume, beautiful breakout. And now there's been a little bit of profit taking, so the stock is pulled back. When we enter those types of stocks, we have lots of nice upside to the trade when we have that market tailwind, and the price action off of that short-term low is going to be nice and consistent, very easy to stick with that trade, as opposed to getting long a stock that is surging higher. Those moves are overextended, and then you've got to ride out a lot of these fairly severe dips. That's not great price action as far as being able to enter the trade, add to the trade, ride the trade. So a lot more volatility on these stocks that are surging higher. So let's take a look at the market, and I'll explain why this is bullish. If we go back to the breakout above the 100-day and 200-day moving average, we had this beautiful breakout back in May, and I had mentioned to you back then that the true test was going to come when we challenge this breakout right here. Every time you get a breakout, you're going to pull back and you're going to test that breakout. If the pullback is brief and shallow and we fly off of that level, That's a bullish sign. That's exactly what happened here. You can see, test the 200-day moving average, fly off of it. We don't grind off of it. We don't spend a lot of time on it. We fly off of it. Great. Here's another little test. Now we come into AVWAP-Q. We test that. We absolutely fly off of it. When you have dips that are brief and shallow, it's a sign that buyers are aggressive because the dip never gains any traction. There's not enough selling pressure to drive the market down. There are always buyers there waiting to snap up shares. That's why the dips are brief and shallow. Here we go again. We got another one this week. We had that really weak unemployment report back 2 weeks ago, and the market sold off hard on that news. So we come in, and what happens? 2 days later, we had a really weak ISM services number. Almost fell into contraction territory, 50.1. Service sector, 80% of our economic activity. Big number. Also, these ISM numbers are surveys, so they're very, very current. It's not like most of the economic releases that are backward looking. This is very current information. So what did the market do? It didn't even stay down a day. It rallied the very next day and erased that candle. So fast forward to this week. We get a breakout to a new all-time high. Let's zoom in a little bit more right here. Well, what happened there? We got a CPI number that was largely in line with expectations. 0.2% increase. Yay! Inflation's coming in. The Fed's going to be super happy about that. That's going to give them lots of room to cut interest rates in September. The market is pricing in a 100% chance of a 25% basis cut in September. Well, what happened this week when the PPI came out? It was hot, 0.9%. Ooh, for sure, this is going to be the straw that broke the camel's back. There's no way. Everybody's looking at the Fed to cut interest rates. Now they're going to be possibly hedging that and saying, well, maybe we should wait another month. That was a very, very high reading. I went back and I looked at all the components for PPI, and I was expecting to find that maybe one or two of them were responsible for that hot number. It was broad-based. Even the core was 0.9%. Not particularly good. What had happened with the market? It rallied back off of that bad news like it didn't even happen. M15 chart, there's your drop on the PPI, and the market closes on its high. Incredible resilience. So is this going to continue? The bad news is mounting. I've been saying for a while that global economic conditions have been deteriorating. It's just a matter of time until that makes its way to the US. But in the meantime, the market seems oblivious to all of this, and it just keeps marching higher. And I'm not sure if that's because there's a lot of international money flowing into our market because it's the best game in town right now. Doesn't really matter why the market is moving higher. It just matters what the technicals look like, because the technicals are explaining exactly what institutions are doing. Not what everyone is saying, what they are actually doing with their money. And that's why we lean on technical analysis. Price is truth. And so when you get these brief, shallow dips that are immediately gobbled up, doesn't matter, by the way, if it's on a daily chart or a 5-minute chart, same principle applies. When those dips are gobbled up, dips are gobbled up, dips are gobbled up, that is a sign of aggressive buying. It's not until we start to see some bigger, deeper, more prolonged dips that we have to be concerned. So again, a couple of notes. When we get a market gap up, we do not chase it, especially when it's a gap up to a new all-time high. Almost every single one of those, the whole way up, has been faded, and we've had a bid check. Sellers come in, profit takers come in, they drive the market down a little bit, support is established, That's our entry point for day trades. So, truth be told, I have not been doing a lot of bullish swing trading right now. I'm keeping my trade duration to really day trades and a handful of overnights. I don't have the confidence to swing trade right now because I feel that when the market does crack down, I don't know where that big news is going to come from, but there is an event that could spark some selling pressure this week, and that's the Jackson Hole Symposium. So Fed Chairman Powell is going to be speaking about 30 minutes after the open Friday this week. So watch for that because it often signals what the Fed is going to be doing at its next meeting. Now, if he hedges at all and says maybe we need to wait an extra month to see how that PPI number pans out, then the market is not going to like that news at all because right now it is priced in for a rate cut. And the one thing to bear in mind is that when producer prices increase, it normally takes about 1 to 2 months for that to pass through to consumers. So you have manufacturers, companies experiencing these higher input costs. They're not going to eat all of them. They're going to pass some of that on to the consumers. And so that takes about 1 to 2 months. So mark this on your calendar. Next month, when the CPI comes out, in October, when the CPI comes out, you can expect that those readings might be a little hot because we saw that big 0.9% number this week. And that could weigh on the market. We're also going to get the FOMC minutes this week. That'll be Wednesday, 2 o'clock Eastern time. It'll be released during market hours. Typically, you don't get a huge reaction off of the FOMC minutes, but it'll give us some insight on where all of the officials were. Now, that's almost a month ago now, so it's not going to really include that hot PPI number. We're not going to get that included in their remarks. So it'll be interesting to see what happens this Friday, what his statement is, and the puzzling thing right now is that if the Fed is planning to cut interest rates, you would expect that yields are starting to decline, right? That's not what's happening. This is the TLT, US Treasuries, and you can see how today it dropped below the 50-day moving average. So when bond prices go down, yields are going up. If the Fed is going to be cutting interest rates, why are yields going up? Well, one of the reasons is there's a lot of debt being issued right now because the government has to roll over $9 trillion in debt. So when you have a ton of supply and lower demand, why is the demand lower? Could it be because of the tariffs? Sure, that could be a factor for sure. But when you have a lot of supply and waning demand, that in and of itself is going to mean that prices go down. So a lot of supply, lower demand, prices go down. That's what's happening with bonds. A lot of bonds being issued, yields are going higher, even though the Fed is going to be cutting rates. The other thing to keep in mind is that when the Fed does cut interest rates, there's a reason for it. The reason is that economic growth is starting to slow. And be careful what you wish for because the market will usually be pretty receptive of the first rate cut or two. But after that, if economic conditions continue to slip, then all of a sudden fear starts to set in. Oh my God, the Fed waited too long. Things are worse than we thought. And if you look at what central banks have been doing around the world, they have been cutting interest rates for the last year to no avail. Economic conditions have not improved. Demand has not increased. Economic conditions have not rebounded. That's the problem. So until we start to see some warning signs in the market, some warning signs in the price action, you've got to stay long. You don't have to swing trade long. Day trade. Try and capture what you can out of this move higher, hit and run types of strategies. And you actually could trade both sides of the market here. I am seeing some decent shorts set up. So I'm going to provide you with a day trading short. I'm going to provide you with a day trading long. And then I'm also going to give you another play where you can sell some out of the money put premium, collect that premium, and generate a nice 5% return in 2 weeks. 5% return in 2 weeks. Where are you going to get that kind of return? That is a beautiful return. Wait till I show you that trade. I really like the way that that's setting up. So right now we're kind of in wait and see mode. That Jackson Hole Symposium could have a big market impact, more so on the downside. So surprise would favor the downside. Why? Because the market's pricing in a rate cut. That's why the market has been rallying like this. And that Fed put, if you will, that Fed safety net has given buyers the reassurance that they can come in and continue to buy these dips. So what are the types of price action that we'll be looking for that tell us that, yes, finally sellers are in control? Yes, we're starting to see some risk off. Yes, we're starting to see some profit taking. Well, first of all, when you have this type of very strong price action, you're going to get a drop. It'll be pretty quick, and it might get down to the 50-day moving average or so. If it's brief like this, it's nothing, just these little pullbacks that instantly spring back. That's nothing. This is going to take 2 or 3 days of sustained selling. Okay, that's the heaviest selling that we've seen in months. I'm going to pay attention to that. What will we be looking for after that? So we'll be looking for the 50-day moving average to be tested and then a bounce off of it. If the bounce is very meager, takes 3, 4, 5, 6, 7 days to even just get a little bit above it, and that's a sign that there are sellers, and that will make a lower high double top, and then the next move down could test this 100-day and 200-day moving average. So that's what it would look like if sellers were finally taking some risk off, taking some profits. I'm not saying that that's what we're going to be getting. I'm going to be watching to see if that transpires. But until then, you have to expect, given all the price action that we've seen so far, that any kind of little dip down to that 50-day moving average is going to result in another bullish flag, and we're going to run up and test the high, perhaps even break through it. Now, I know we've got deteriorating economic news, and we have bearish seasonality ahead of us. So those are reasons to be cautious. But when I look at this steady type of price action right now, it's going to take an awful lot to turn this market. And I don't know what that news is going to be. No rate cut in September could possibly be one of those things, especially if we start to see inflation rising again, especially if we start to see a weak jobs report, because that would be stagflation, and that is something that the Fed has warned about. Decreasing employment, increasing prices, not a good market combination. So let's see what plays out. Right now, this is a very light news cycle. This is when a lot of traders take time off. You've got kids going back to school, so they're getting their vacations in. You've got Congress in recess. You have the Fed in recess. So there's not a lot to really drive the market. So I don't know where the market's going to go. I only know that right now, if you are in the buy the dip camp, then you're approaching the market in the right fashion, because all of these moves have been bouncing. So continue to do that. The other thing that you'll see when the market does finally start to roll over is late day selling, where you see heavy selling pressure. Any gains throughout the course of the day are easily stripped away, and you're seeing nice big volume in the last hour and a half of trading, with the market closing on its low, and then follow through the next day, which we haven't seen that either. Every single red candle has been gobbled up by a green candle, so you don't see too many pairs of red candles. So we need to see some follow through. We need to see some sustained selling. And if it's just not there, then you know every dip is going to continue to be a buy. So let's take a look at a couple of stocks. And I ran a search. So let's start there. I ran a search, and here's what I was looking for. I had mentioned to you that I want a stock that's got good relative strength. So it's been up recently. D1 relative strength. But I also want a stock that's pulled back just a little bit. I don't want to be chasing new highs. I need to have that pullback. And as soon as the stock finds support off of that pullback, then I've got an opportunity. And then I've got a chance to ride that stock higher with some decent price action and some momentum, a trade that I can ride, perhaps even add to. Those are the types of opportunities that I'm looking for. And so D1 relative strength, but relative weakness H1 and M30. The stock has good option liquidity and it's above all of its major moving averages. So this stock is trending. This is not a weak stock just because of where it is in relation to its moving averages. It's also got that nice D1 strength, but we've got just a temporary little blip. And so SOUN was a stock that came up on the search. And you can see beautiful breakout right here, horizontal breakout post earnings. Stock runs up. It's been able to hold most of its gains, but today it pulled back a little bit. So how am I going to approach this stock? Well, if I'm in the mindset that there were a lot of buyers right here, and you can see the heavy volume, they loved this earnings release, and they fueled a rally above this horizontal resistance, which is now support. So if I go to the open of this long green candle, I can see that that low was somewhere around 1362. Great. Would I like to buy that stock at 1362? Heck yes. If you're going to give me an opportunity to buy this stock as it checks that breakout, just like I told you earlier, these breakouts are tested. These breakouts are challenged. And in fact, this breakout right here, this Tuesday candle, was challenged. We tested that breakout. We pulled back to it and we rallied off of it. So this breakout was actually confirmed and tested. Same thing with this stock. I'm expecting that breakout to hold. So I've got an opportunity to use an option strategy that I've talked to you about recently, and that's selling naked puts. So I'm going to go out 2 weeks in time. That would be the August 29th expiration, and I'm going to be looking at the $14 puts. And the $14 puts were 30 cents bid, offered at 32 cents. Would I be a willing buyer of that stock at $13.70, just a dime above this low? Yes, I would. And I'm ready to take assignment. So please, if the stock pulls back and we get a sign, don't ask me if I still like the stock. Yes, I still like the stock. I'm going to be in the stock. I'm ready to buy the stock, okay? That's part of the plan. If I don't get a sign and the stock doesn't pull back to this level, which is more than a 10% move in 2 weeks, I'm going to collect that premium and it's going to generate a 5% return based on the margin that I'm putting up, which, by the way, I'm not putting up the naked put requirement, which is minimal. It's 20% of the underlying strike price. I'm going to put up $7. I'm selling the $14 puts. I'm going to put up $7 in margin. So the 5% that I'm generating is based on that $7. And if the stock gets put to me, I have enough money to buy it on Reg T, because 50% Reg T, I can buy it at $7. So I like that play. So let's go in and take a look at some other stocks that I like and how I would be approaching them. This is off of the Green Royal Flush search. Reddit. I like Reddit. Look at how strong Reddit is. But Pete, I can't buy this stock. It's so expensive. It just keeps going up. Yeah, that's what strong stocks do, because there are institutional buyers out there. The stock never has a chance to retreat because every little market blip, every little attempt to sell it off is gobbled right up because there are long-term buyers in the stock. I'm staying short-term with this. I'm not looking to take a swing position here. Could I sell some out-of-the-money puts on this? Not really, because you're at $246. Your first support is around $200. at that AVWAP E level. So now I wouldn't be selling puts on this. I wouldn't be doing bullish put spreads on it. I would just be buying the stock if it has relative strength and it pulls back on the open. And do you see these overlapping candles? Do you know what these overlapping candles mean? You should know what they mean. When you look at a chart, you should be able to go, oh, I understand what's happening here. Pull back, close on the high. Pull back into the previous bar, close on the high. Pull back, close on the high. Pull back, close on the high. Now let's go in and take a look at the 15-minute chart. That's what's happening. That's why there's overlap. So every single one of these dips has been a buying opportunity because that's what the institutions are doing. Let's go into a 30-minute chart. You'll be able to see more days. So every time that you get a dip in this stock, it's a buy. You get a dip in this stock, it's a buy. You get a dip in the stock, it's a buy. You get a dip in the stock, it's a buy. That's how I would be approaching RDDT, Reddit. Every dip today, we had a dip on RDDT. That is a tongue twister. There's your dip. And we'll put up the SPY overlay so that you can see what the stock did. And so, yes, there's the market. Market continuing to sell off after the open. What does the stock do? It dips for just a moment on the open. And as soon as the support level is reached, you start seeing it fly off of that support because there's a large institutional buyer out there. Look at the volume. You want to join that. So you enter in here, gets right through VWAP, has strength relative to the market on heavy volume. You've got some really nice upside to it. Hit and run. Can't get through, can't get through, can't get through. This is where you would start taking profits, especially if you hung on a little bit longer. The open of this last long red or long green candle that established the high of the day, when that fails, you should be out. Okay, so that's just a landmark, but you should be taking gains in there, but really nice gains. That's how you should be approaching Reddit. So market down, market pulls back on the open, stock pulls back on the open, stock has immediate, instant relative strength. You're watching for it, you're getting long, and then you're watching to see what the market does. The market finds support. Stock's going to take off. Market continues to leak oil. Stock is going to hold up relatively well. You can exit that trade, scratch it, maybe make a little bit of money, wait for that market support, and then re-enter. But Reddit is a long that I really like. I'm going to show you a short, and I'm going to take off the SPY overlay, and we're going to go into, it might have been heavy selling that the stock was on today. Yes. Cisco, nasty little chart pattern here. So you've got a stock that's breaking out to a new high, and then you have earnings here. This is a failed breakout right there. Breakout to a new relative high, back end, very nasty today. Blam! Right through the 50-day moving average. This stock wants to go lower. So am I going to come in aggressively and short Cisco on Monday? No, I don't even know what the heck the market's going to be doing. So if I've got a day where the market gaps up, Pete, you told me not to chase gaps up. That's right, because most of those fail. We usually are going to see a bid check. So if the stock gaps up with the market and then it starts to leak oil instantly and the market can't advance because it's got to go through that bid check process, there's an opportunity to short the stock. That's when you would want to be taking a look at Cisco, and that's when you'd want to be watching for that relative weakness. But this is some decent, heavy selling, and look at how steady that price action has been. So once again, and let me pull up the type of chart that you'd have to be, you got to be very selective, and you have to be very seasoned, to be quite honest with you, shorting this market, because every single market drop has been gobbled up. Now, there's time for you to take profits. There's time for you to exit. But if you overstay your welcome, you're going to lose money. That's just how the short side works right now. So you come in and Monday morning, let's say, I don't know what's going to happen Monday morning. Tomorrow morning could be big news that, Putin and Trump had a great talk and the market likes the news and you get a gap up. All of these gaps up are faded. So if you came in and you saw this early fade into the gap and you saw Cisco gap up and instantly give back those gains, relative weakness, okay, this is your shorting opportunity. You get another gap up like this. Oh, hey, that open failed. We're into the gap. We're going to be pulling back. This is your opportunity to short a weak stock like Cisco. That's how you play it. It's hit and run. Both sides can work. I'm favoring the long side. I would just as soon wait for a market dip and then to evaluate stocks with relative strength, wait for them to show support before the market finds it, and then take those long positions. That's the best way to approach the market right now. In general, overall, you should be trimming your size. You should be trimming your trade count. This is a very low probability trading environment. We don't have a lot of news, but we do have some news coming up this week. So tread cautiously in here. This is not a go-go, gangbuster, gotta have them, bullish market. This is a plug your nose and buy them market. When you get those dips and you have that support, then you can come in and buy some of these stocks, even if they've run hard, even if they've been up a lot, as long as they have good volume and excellent relative strength, and you're only day trading them or perhaps an overnight, that's fine. You're keeping your risk fairly low, very controlled, so that if that stock loses its mojo, loses its momentum, decides that it's exhausted on the upside, that's okay. Let it come in, because when that happens, then we might have an opportunity to trade it a week or so later when it finds support, just like we're looking to do with SOUN, just like we did with Netflix. That's a good example of the type of stock that we like to see, something that's been strong previously and that's had some temporary weakness, has found support, and is now starting to rally off of that support. These are nice moves because we can stick with them for 2-3 days and ride that move higher. So those are your marching orders for this week. We don't have a lot of news coming out. Everything's going to be pinned on the FOMC minutes on Wednesday. I don't know that that'll give us much clarity because it's a month old, doesn't include the PPI number. Friday's symposium, Jackson Hole, 30 minutes after the open, that's when Powell speaks. So you can probably expect some very light price action on Thursday because everybody's going to be squaring up and they're going to be waiting for that news to come out Friday morning. And perhaps then we'll have some insight on what the Fed's going to be doing in September. Thanks so much for watching, everyone. Please subscribe to my YouTube channel. It helps me reach a lot more traders when I have a lot of subscribers. Give it a thumbs up. And by all means, post your comments. Let me know what you're trading, what you're having success with. I'll make sure to respond to all of them. Thanks again. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.